I was talking with my mic muted like an absolute
I don't know why you mute yourself at
buffoon.
the start. It auto mutes.
I'm not. Yeah, I know it does it automatically. It's a habit. So
Boomer.
yeah. But yeah, good morning, guys. Hopefully, you guys are all well. We've come into some pretty major targets, stuff we've been talking about for a long time. Trigger yesterday was given both in the group and gave it on Twitter too, but didn't give the key level on Twitter. But the key level for me was this monthly SFP here at 23,967. So that's where I was focused on in terms of wanting to see this hold. You also had a Dalton setup that, had you lost this level, probably would have been playing out as well. And then you are looking for that retrace. However, 24.7K being the level back tested and resistance on the way up, which we know as the weekly SFP, right? So really unusual turn of events and how this went. But if you guys watched the last public live stream we did, we talked about if you got above 21,468, things actually look pretty good. Then if we go out to the monthly time frame here, you can see this is where we also have our two levels, right? So how you would have traded this on the way up, finding these levels, just identified like so. Why? Because we're looking for changes in behavior, because we haven't had one in a long time. And so we were talking about the monthly open at 23.1, even saying if you got above 23.1, we would expect an attempt at a new high. Now you wanted to be living above this level. And what I mean by that is if retested, we wanted to see support. I don't know that we ever retested necessarily the monthly open, but we'll take a peek here in just a second. And there we go. There's a monthly open. Go back to like the 1 hour. Now you just blasted through it straight to 24/7 back test of that secondary monthly swing fail we just identified right here at 23,967.50. And then just no real sign of weakness the entire move up. There was really no reason to take anything outside of intraday shorts. 22,810 was a good one. You could have got a short in there. Could have got a short in here at 21,468. The levels we've identified, but realistically, no reason to really be flipping into a short just yet. Now, I did take a one take profit. So right here on the position from January that I took at 16.6. So another 3% of that position will be taken off as soon as we hit 26,666. It'll be a total of 3%. It was 2% going into this single print, and then another 1% at 26,666, because you know how I like my numbers. But yeah, I keep seeing people saying we front ran the yearly pivot. It's a 0.3% front run, guys. We're talking like, is it even $100? It's not even $100 on this asset trading for 26,000. So I would consider this a tap, to be upfront with you guys. And this is a major mean reversion. I've put it as my pinned tweet. I'm actually going to clip that today and use it as a short. We're going to collect a little clout for once. We are going to go ahead and do that. I know that we called for this target in December, and it really came down to patience. Things don't always go as expected if you're trying to get every local move. That's why I've stayed in that position from down here. And I said, even if I don't get my fills on a separate position in this region, which I did not, I'm going to continue to hold that position separately and trade it accordingly. And you can see that things panned out. So not upset about that at all. I still hold a bunch of spot Bitcoin anyway. I just didn't get to put any leverage on it from this region because I do trade inverse perpetual. So for me, it's still all good in the hood, I guess, for lack of a better term. But we should talk about what happens if we get through the yearly pivot. We've discussed this at length before. If we are to get through some of these levels, right? So if we flip this area, it's on like Donkey Kong, for lack of a better term. To me, if you start living above like 28,726 on a material closing basis, and I'll show you the level I'm talking about right here. This was our key level in this range. I was posting memes about you're going to want to hang on to this one with the IOU from Dumb and Dumber. Still a very important level. It's your summer low from 2021, and it's just such a key level coming into the chart still. So if you were to live above this and hold it as support, meaning that we could go up above it, come back, and then back test it, that would look pretty good. If you can't hold that as support, and then you've got the let Let's go ahead and get rid of this guy here. This is your old 60-day pivot, which just got blasted straight through. And we've now closed this single print. So the single print's no longer relevant, right? You have your 12M1 that we've effectively tapped. So get above the 12M1. I'm targeting 28,726. If you can get above that, I think that we have a pretty good shot at coming up to $30,169, somewhere in that region. This is like a zone here, this little box. You know, I know that we have NPOCs before this, like right here. I'm going to get rid of it just to clean the chart up. I think that this box right here, the coordinates on it are 29,873 up to 30,169. That would be the next target if we can clear 26,724, then 28,726. I think that's where you're probably heading. Obviously, if I were a gambling man and, you know, watching to see what's going to happen next, you really want to be marking off these levels here, your last local high. You could put a box here if you want to. That's probably the preferred method. You want to see these levels holding, right? You want to see this little box doing its thing. If retested, we do want to see this operate as support, and that comes in at 25,351 over to 25,222. A little $100 window there. Want to see this level holding. If we dip below that, which we kind of did already when we came up here initially and took the high, you came back to where? Almost 24.2. Good, a pretty good little dip here after getting back above the 24/7 region. So if reached and we lose this box, 24/7, which I don't know why I don't have that level on here. Let's go to the tape. Where is my WSFP? 24/7. That would be the region I'd want to see hold, mainly because, again, go out to the weekly time frame. What have we not done on a weekly time frame basis is close above this level. So we do need to see if there is any kind of a retest of that. We want to see that level defended. Preferably, we don't get that. Preferably, we hang out above this local low from the prior range in here, and price can continue to push to these other targets. But to me, very, very simple. Clear the yearly pivot here at 26,724.50, which that target is now reached. So the 80% strike rate on these still lives on. It's very, very reliable for us and has resulted in some good trades. 28.7, 26.50, and then we're looking up to this zone right here. And this is just the Q2 2022 NPOC at 30,169. You also have a weekly NPOC there, and you can see this is the last place you settled up weekly wise as well. So that's why we've boxed it off. A good region to have on your chart. That's going to be the most important area in this little range. And I bet that if we went to the ranges tab, you know, and this is a little bit ahead of ourselves. Yeah, there you go. There's your POC. And I bet if we go to the quarterly, you know what I did not do before we started this? Did not turn off my space heater in here, and it is getting very warm. I'm going to turn that off here in just a second. It's getting hot in here, Max. Do you feel it?
I'm roasting, mate.
You're roasting? You're over in Dubai. I bet you are roasting. I bet it's hot as balls there, for lack of a better term. Yeah, look at that. There's your POC right there. So that's how that's acquired, right? So we're looking for that. If you get above 30,169 and you're living there, and what I mean by that is, like, we don't just take this local high and then dump back below the level, but you're living above this. All those 2019 comparisons do start to look likely, where you're looking at something like this. We had this big run up, you know, and we could pull on the yearly pivots, which we've done before. Let's go to yearly right here. You can see that you came up to this level and you kind of played with it a little bit, but you still put in the higher lows before trending higher, right? If we were to see a similar type of run, we came up to the level, we get above it, and we see that run. I'm actually not looking for like 48K. A lot of people are in that camp. The level that I'm most interested in is the 6M1 right here, 38,922 in that case. Main reason being is I like it personally. And let's pull up. Oh, is this it? No, that's not it. It's the 6M221. Or is it the 6M122? There we go. There is our level, as you can see, our NPOC. And now we're going to do a little bit of homework. We're going to go over to the left. And what do we know about the summer lows from 2021, the June bottom, the power bottom? There is your top of the range, right? So that would be the entryway back into the soul of this whole structure. So if reached, like I said, if you can't breach the high here, if you breach this high and then dump below these levels, then well, you could be re-entering this structure range. However, if you get back above, what do we know about this range when we come down to it? Usually we cycle it. So I would expect to see us cycle this range in full if we can claim this box right here at 30,169 and like hold it as support. That doesn't mean come above it and then go back below it. It means, you know, confirming support, right? So a lot of times it's not that pretty. You'll come up above it, you'll come back below it, find support somewhere else, and then turn it into resistance before finally breaking through. But if that were the case and we were to see something like that, even this is way down the line. I think this is the target that I've got the most interest in right now is 38,922. So that's as of right now. Obviously subject to change, but you know that's the rundown of the high time frame, guys. Very, very simple. You know, if we lose this level here at 25.2 to 25.3, 24.7 is right there, and really closing the weekly below 24.7 is it's not a good look. To be upfront with you, I would expect probably a retest of the monthly open, maybe even lower. I know T-Bone has been talking about this potential shark in the group for quite some time. I believe it's this here, which it is valid. You know, and if it plays out, your initial targets are the B leg, which this is really pushing it because it's a 1.19. You know, you want 1.133 here for the expansion at the highs. So it's not completely out of whack, but it's getting to that point where it could be invalidated easily. And this was actually perfectly valid right here as well, which he did point out. And you've already hit target on that. You hit the B leg, you hit the 50%, gold pocket just below it. So technically this is a completed pattern in my book, and I wouldn't necessarily trade off of it anymore. But if it did play out again, you would actually be targeting all the way down at like 21,000, you know, 400, 500. And I think you'd have a much bigger drop at that time back down to like the yearly open. So it really is in Bitcoin's best interest to get either continuation or at least start confirming some of these levels that we have not seen held as support in a long time. We want to see them being held as support, right? Especially by the end of the week. So I'm going to get rid of my weekly open because it's a messy chart. And we've got the weekly pivots here. So I would be curious, actually, where is my quarterly pivot coming in at? We don't have to come back to it, but there it is. There's your quarterly pivot. Where is it at? Coming in at the monthly open. So if we lose 24/7, I'm looking for the monthly open. The quarter only has a few weeks left. And a lot of times we like to revert back to the average of the prior session, which this is the current session we're talking about. It's the quarter. It's coming to a close. A lot of times you'll front run that and start reverting back to the mean in early. So we don't have to tag this by any means. You know, again, it comes down to statistics, not guarantees. So continuation is the name of the game, though, if you don't want to see $23,000 again, in my opinion. I think that I start to shift into that bias as soon as we start breaking back below this local box here above these highs. Obviously 24/7 can be support as it's been resistance and good, you know, a good level to trade. But to me, I think that if you start breaking back into this range, I'm going to look for that monthly open straight away. And if you lose that, man, things can, I wouldn't say they could get ugly, but they're not going to look great. In my opinion, they won't look great. And we should look at, on that note, just so that we have the level in mind, which this is subject to change, obviously. There is, yeah, there's your March. Look at that. So your March value area high basically comes in at the monthly open right here. It's hard to see. I know it's hard to see, but we'll turn on the monthly open. You can see it's right here at the high. So yeah, if you lose that weekly swing fail, which is going to be your new weekly average actually coming into the week, and it's only Tuesday, so lots of time. You lose 24/7 or this box, however you want to do it. Yeah, you're probably coming back to the monthly open, and that's a really key area because if not, you know, this range is going to probably fill out, and it's pretty big. It comes all the way back down to 19.5 as of right now. So not good, but you still have, you know, again, like we're still trending above support. I don't see any reason why we wouldn't try to continue some of these higher targets as of right now. I've not checked the order flow though, so don't shoot the messenger if Max comes out and is like, this is short of a lifetime or something, you know. OC, you already know the answer to that question. We do not trade off of, is this best established on a daily or 4 hour? None of that shit matters. The only thing that matters is order flow. I have to answer this question like every week in the group. it's become a question that I hate answering. And so I'm usually pretty blunt about it. Closures in that nature of establishing support really don't mean anything. So is it best to see a higher time frame? I mean, sure. I mean, you could probably start making that, that assessment, but there is no rule or standard for it. What you want to see when you come into a level is you want to see the open interest, you want to see the delta, you want to see people defending that level. You want to see buyers stepping in and defending the level or trapping shorts if there's a lot of people that are shorting into it. There's a lot of variables that go into that. So that's the stuff that's happening inside of those daily or 4-hour candles you're talking about. The candles themselves are irrelevant without that information, in my opinion. So, hola, Jimmy W. Good to see you in here, man. We'll see you later as well, probably on Sin City. I know that you're always in the chat, but yeah, that's really it. You got the move. It was very unexpected, and I will say that. Like when we're talking about time, I guess we should discuss time here, because time did help us with the drawdown. We knew what we were looking for in terms of this. Let me get back over to here. Hopefully this chart's not too messy by now. Yeah, we've got really no levels on here, so that's good. The time aspect of this. So we knew that we were looking for this peak in this region, which we did. We got the peak, like we said. This was an easy way to trade. You got the swing fail the high, and we knew we were looking for sub 20K. It just didn't quite meet the targets that everyone else was looking for, including myself, which is all right. It's part of trading. What you did get, if you guys recall from the last one, was that 20,024 would be a pretty key level. It was that previous day low. You swung fail it, back tested it before moving up. The volume on this move up was pretty good. I know Max was kind of, I wouldn't say taken back, but he was surprised by the volume that was coming in. So it is one of those things where there's just been no real sign to like short this at all, outside of scalps here and there. You can identify the levels and then you have to trade the reactions. And so that's what we've been doing. But time, so now that this is broken its timeline, right? And you can see that was actually the high right here. Do we have an alternative timeline? We do. And I've been talking about this one kind of intermittently, that, this is our local range. If we were to remain range bound, which this could still come back down and break down. We've seen it before. But if you were to get an extended rally, let's talk about that now that it's relevant. Let's say we get through this $26,000 region and we go to this 28, 30, maybe even 38K like type targets, right? What's the timeline like for that? Well, they would look like this. We'd be breaking out of this time and price, and we'd be saying, okay, we might have a longer trajectory, and we'd start looking at it like so on a much larger scale, saying if we were to take the overall length of time it took for us to make a bottom from the high of 2022 and extended that into 2023, and we had a similar move, it would put you in the summer before there would be like a real peak. And if you were to take a look at here, what did we notice here? You started breaking out in April, and this did not peak till June. Yeah, June. So 3 months, is the timeline here. Is how long that took. We're currently in March, and this would be a longer timeline for that. It would kind of put you in that summer mode for looking for a peak again. That's only if this ended up being the timeline. What I liked most about this is that you had two competing ideas in terms of time. One saying, well, we have a local range we should be establishing, which we did, and it treated us very well. And you have a higher time frame one that could be getting ready to become a thing, come to fruition, so to speak. And they actually merged right here for that peak. Like you can see that you ran up to your time and price line right here on both sections and found your rejection there, which I thought was really, really cool. Otherwise, these are just fun to do to give you an idea of time. And the reason I bring that up is, I'm going to post my exit today on Twitter for my last take profit on this trade. But one of the biggest pieces and components was one, having this target well in advance. Like we started talking about this on December 14th on Sin City, and in the group before that, we've been all kind of trying to calculate it in advance. But it was just the patience to know that if it was going to take place, it was probably going to have to be like anywhere from January all the way out to, I think I gave March 20th was like my really far out end date where we had some time, which is actually the 0.5 right here of our larger timeline. I was like, March 20th will be an interesting inflection point, or at least an interesting week. So yeah, you're just kind of waiting. You know, you're not looking to be perfect necessarily. There's a lot of people out there who say, oh, Fibonacci time's perfect. It's really not. It's just more of give you a guide of when you should be looking for market shifts. And we've reached that the market needs to find continuation now, or it will remain range bound potentially, and look for new lows into the summer instead of new highs, which would give you that sell in May, walk away type thing, right? So, and you do have those inflection points here as well. You know, you can see that in the end of April, it's telling you that there's an inflection point in the market. And so, yeah, it's just easy to use that way. So for me, still looking to see if we hold like 25.2 to 25.351. If that's not held, I think that you have that $500 dump to 24.7, and that's really a key level for me. Anything below that, and while I know that 23.967 was our support yesterday based on that monthly change behavior we were talking about right here, you can go to the 5-minute and see it. However, I am really more interested in the value area high of the developing March range and 23,134 being the key level at that point if we re-enter this section of price, right? So definitely not putting on any additional risk up here. Not a good idea at all. Just taking profits and being patient for other setups because I did miss a few on the alts. Sell in May, walk away. Yeah. That's an age-old stock market saying, and it actually proved to be true last year. Time on last year. If you guys recall, one of my biggest indicators for time last year was some of the altcoins and their Fibonacci time. And one of those was XRP, Max's favorite coin now that he day trades it. And it had a May fib pivot, had 2 of them in May. And that's when we just dumped out of that giant descending triangle to the targets that we have now. So that's really all I've got. I'm going to let Max get into the order flow a little bit, tell you guys what's going on there, because I know that you guys want to know who's buying, who's selling. You know, is this a good trend? What's going on? So,
yeah. So first of all, I just want to say, though Magic is talking about those higher targets, this is not the time to buy. So,
yeah, definitely not.
Do not be doing that. If you're doing that, you're a fool. I've used that word a few times today. Reason being is I had a big debate on this one here. And I'm going to go over the trades that one could have taken today. I have only taken one trade and it was a short. Regrettably, I didn't take a long, but I'm going to go over it anyway and how one could have spotted it and really identified that it was a good trade to take before the move up really started. So I am kicking myself given the move that has taken place that I didn't take it, but I was holding my guns on the short because I believed I had a good entry. But it is what it is, live and you learn. And really, I should have just taken a trade on another account, but I was like, nah, I've got a good entry here. I'll be good. And it stopped me out. So it is what it is. So it was this one here. So, today, the move up's been huge. We actually haven't streamed in a while. So I went over these lows. I'll go over these lows. I went over these lows for the members. And I need to go back more days, I believe. We'll go back 15, I'll do it. 15 minute. Bollocks. Wrong one. 10 days, 5 minutes. Now we'll go over the lows that occurred around that 19K region. I actually wasn't here trading it, but we'll go over it because they were giving off many signals that someone was building a absolutely huge position. So if you look at all the individual lows made, you had huge positions changing hands. We went over this on Sunday's members stream, but as we didn't stream yesterday and I wasn't here a lot of last week, we'll go over them. So you can see here, open interest was minimal, negative delta was huge. What that tells you is even though the longs effectively were closing out or getting forced to close out, whether it be stop loss or liquidation points, the positions, the contracts on that open interest were leaving the market. So what does that mean? It means someone was taking them. So they were taking those positions, building an absolutely huge long. And if you look at any of the lows that were made on pretty much every single one, I think it actually is every single one that was down here, you had some sort of positions changing hands, no matter how big it was. So with that being the case, someone was building, a huge long, and they were very high volume. So with that, who has the most volume in the market? It's the market maker. And Nancy Pelosi, and the move up was absolutely insane volume. You're just having crazy volume all over the place, in random places where, or I say random places in candles where the volume never normally is that big. So you're having huge buying volume the whole way up, and then you had this spike here as the candle came to the end. And yeah, we had an SFP of it today. Yeah, swing failure pan of it today. Mine just went blank then. And the reason one could have taken this short is because you had positions changing hands on the opposing side in the candle. And you can see at the top, you got your liquidation bubbles, which is what I like to see when thinking of taking a trade. Delta switched at the top. You even got a selling imbalance there. But if you were too shook to take it earlier on, even if you caught it later on when the SFP actually occurred, if I pop that level there, this was still to the low. If you were amazing at catching the lows, it was still a $400 move. It was a great move no matter what. But as you got into this section of the charts, what occurred? Well, you started to see a lot of shorts coming into the market. You had huge bullish divergence building on this low in particular. So with that being the case, all the shorts and the selling is getting absorbed. Someone's holding it up, and then as you got above this region on the charts and started to trap some of these shorts, this should have been the long region. As you got above all these shorts that entered in this section here, and back here as you had positions changing hands here also, as you started to get above there and you start to see lots of buying taking place, this really should have been your reason to get into the trade. So kicking myself that I didn't get that, but the move up itself has been interesting. So you've had buys at the start in the coming in towards the start, leading the drive initially, and then as you get into it, of course, you're going to take out the shorts, followed by a bit of selling to be expected, and you actually came back and back tested some pretty key regions. You came back and back tested, I think it was the Asia high, I believe it was, but you came back and back tested that. Then what continued is a little bit more buying, followed by a ton of shorts entering here, huge open interest increase. Granted, not all shorts, there's certainly some longs that entered. So you've got longs and shorts in here. Longs, it paid off. Shorts, positions changing hands. And at the top, more longs, which people just see the move up, see the green bubbles effectively, and they're like, time to buy. And that's where we're at now. So right now we're in a position where, high is in for now. Huge volume spike. In this whole move, it's been a crazy volume. You've had 95 million there, and at the top is 53. That is, that could be a high for the day. That very easily that can be the high for the day. It could be the high for the next, for the rest of the month. The volume wise, does that mean it's going to be? No, but from a volume standpoint, it's very significant and can easily be the high. So let's not sniff at the high. Is it a finished auction? It is a finished auction. So that's a solid high from a footprint chart standpoint. And then right now, the interesting thing that we've had, and I posted this in the members area in the group, and I said, look, if you are these guys here that are buying into this section of the charts, I said, this best not be any of you guys, because if you do have them, the old habits of buying towards the top and buying when you see a move and it's coming to the peak, we can see it in the order flow, and it doesn't work out the majority of the time. So right now, what I'm really looking at, given this, is maybe come up and test the golden pocket. These have been really good the past couple of months. When you've got a major high or low, simply pulling a golden pocket, and oftentimes you'll see price. I don't know what's going on with this, but it's not letting me click. Oftentimes you'll see price come back to the golden pocket, and then that'll be your trade setup, rather than trying to catch the knife, or I don't know what they call it for the opposing side. But that has been time and time again, really good opportunity for anyone to get into a trade without, completely straight up gambling. So that's kind of what I'm expecting. I imagine it would cause more buyers to jump in, considering what we can see up here. We've got a ton of buyers coming in, and that's all there really is up here. You've got a bit of selling, of course. Great time to sell, considering the potential gains that one could have made, but really not a good time to buy, even though you've got targets to the upside. Doesn't necessarily mean you're going to hit them. So right now, looking at this data that we've got, I favor a rejection here, and then we've got some liquidity to the downside. So where could we go? Well, as well as the liquidity to the downside, we also have a single print. So the single print will come and back test some of them key levels. It come back test 25K, which would be very nice to come and solidify that region on the charts as claimed effectively, and then move back up. There's no reason for it not to do so. So I really like, if we do reject from that golden pocket, coming in and filling this single print that we've got. So it is an inefficiency. Put it on the charts. It's going to be pretty key, because if we do start to make our way into it, there's a lot of buyers up here that are going to be underwater. And it's one of my favorite things to trade against is trap traders. So, if we do start to make our way back below this low that is now, in here, there's a very good chance that it'll be a rather fast move as we head towards all the buyers' stop losses and what have you. Because, if you're buying up here, really, I don't see the sense in that initially. But if you're buying up here, where the hell is your stop loss? They're 100% getting forced out of that position. So, where are you putting your stop loss at this point? Because it's multiple percentage down. So, it's really not a place to buy. And yeah, I'd expect it to be a rather fast move. Even to the VWAP would be a great trade as we break into the single print and get down there, considering all the traders that we would have trapped should that move start to take place. So yeah, from an order flow standpoint, move ups pretty strong. Can't argue with it. The high that we've got now is, it's a very valid high. Is it going to be the 100% high? No, I can't say that. But there is traders in the market now stuck. So I would personally like, I'd favor the rejection from here to give us the trade, and then take it down and force out the late buyers, which is dumb money buying up here. So that's kind of what I'm looking for, and that's going to be the trade that I'm looking to take right now, because I'm not looking for no one of any technical analysis sense is looking for longs up here. So I would rather we wreck than people. But yeah, we could all also come and close, come and tap that pivot, so it's 100% tapped, and get a nice swing failure pattern. There's nothing stopping us doing that, because I'm no doubt that these people aren't going to be taking profits there, and it would just take out the small number of shorts that have entered in this region of the charts to make them not profit from the move down. Because though this is a place one might want to be selling and shorting, we've not really been given a trade setup in order to do that yet. So yeah, that's kind of what I'm looking for. We either reject here, SFP of the high, and then ultimately want to close out that single print. But yeah, that's pretty much all I've got, really. I don't think there's anything else to really go over.
That's it. It's all you got.
I know, wank. Why do I even turn up?
Yeah.
Have you noticed it's gone dark in the time that we've been recording?
Has it?
Sun has officially gone down.
Oh yeah, nice. It's now getting it's staying lighter longer here now. We had the I think, what is it called, spring ahead.
Spring ahead.
Yeah, that we move our clocks forward an hour.
You call it spring ahead?
Yeah, because it takes place in the spring, and then fall is when you turn your clocks back an hour, so it's called fall back.
It's so American. It's so American way of describing.
Well, we have to make it really easy for people to remember, because people are stupid. Yes. That's really the only way to put it. It's kind of a terrible way to say it, but yeah, no, I agree. It's one of those things where, if you're looking for a short, unless you played the 26,500 single print close up to 26,700, 2450 as the initial tap, got in on like a delta switch up. Yeah, you're waiting for either that gold pocket or you're waiting for an SFP of the high still. Those are the setups. Otherwise, you're just YOLOing a short in and putting your stop loss above that 26,500 or 600 high there. And that's a pretty wide stop loss. Was that like 2-3%, give or take, a little over 2? Right. So
yeah, it will be.
Yeah, on a day trade, that's very high. On like a
swing.
Swing, it's not so bad, but a day trade that's a very big stop loss. And I don't really see too many comments. I did get asked about Matic. I'll look at Matic real quick. Did you take the 95-cent trade? No, I didn't. I just not an area I really wanted, and I don't trade things. Plus, it came in on the weekend. A lot of this stuff did, and if this stuff comes in on the weekend, like all these alts did, things like that, I'm not going to trade it, guys. I'm not sitting at my computer on the weekend when I have my children on spring break taking trades. It's just not something I'm going to do. I'm at a point in my life where that's not necessary, and you are going to miss things because of that. And, like Polkadot had a really good setup. Matic had this setup down to, like, I believe it was the POC of that range, which I don't normally like to trade points of control out of the middle of a range anyway, especially off a deviation. I think that's it's a ballsy way to trade it. I would never do that, but that's just me. That trade's not going to pan out for you as much as you think based on what I've seen in history. But we were talking about getting a bounce here into like the 12M1. Let me share my screen because I realize I'm just talking while you guys are looking at Max's chart. We're talking about getting this bounce into here. I've already stated that I'm completely out of my Matic short outside of 20% of that position. That's, still running from like $1.55. So I don't really care too much what happens with Matic, because as I was closing those positions, I close out into Matic. So all's at the end of the day is I have more Matic at the end of the day, regardless of this move. And if it continues lower, I'll continue to accumulate. But I'm not going to buy Matic at these prices. I will buy Matic, maybe below this level here when that time comes, if that time comes. But I accumulated most of my Matic down in this region. I have like a daily demand 2 box from 2021. We've talked about this. This is where I accumulated my Matic on the dip. It was all based on this old range here. And I'm not interested in accumulating Matic at 95 cents when my average is closer to like 30 or 40. So, point blank, I'm not going to be buying more Matic in this region. It's just not appealing to me. If I don't get to buy as much Matic as I want to, I don't really care. I'll buy something else with it. It's like the world has infinite opportunities. But yeah, so the price does need to get back above this like 122 to 129 region. So that's all I'll say about that. Polkadot was the one I was referencing. You had a really clean setup on Polkadot, and it came down to your quarter one here. We initially were looking at this weekly NPOC, really, good reaction. However, what do? You come down, you take the low. Even if you miss the overall low here, you're looking to basically get long yesterday. Had I seen this yesterday, I probably would have bought some spot Polkadot, but I did not. I've got my dot from this box here. I've taken some profits, and if I get a chance to take those profits and roll them back into new positions, I will. However, this occurred over the weekend, and I'm just not going to play with it too much. Like right here where you get the SFP starts coming in on a Saturday and the move up starts happening on Sunday. I'm not sitting at my computer or, getting on my phone to trade this stuff. It's not something I do. There's other people out there that will, and that's good for them. But I value my time a lot more, especially with my children, than I do the chart of Polkadot or any other asset. I take hundreds of trades a month sometimes. I know. Yeah. No, I know you're not throwing any shade. I just don't care. It's one of those things where like I get asked like this stuff in my DMs, DCF all the time. Like, will you let me know when you're buying? And it's like, no, I'm probably not going to. If you've ever sent me that DM and says, will you please let me know when you're buying altcoins? I'm not going to tell you. 100% not going to tell you. You guys are in the group to learn how to do this stuff yourself, because I'm not going to be around on the weekend to tell you to buy DOT. And I'm definitely not going to log on to do that. That is not what we're trying to do here. So, the idea is to make you self-sufficient so that you don't need me. That's the idea. You shouldn't need someone like me. And in the future, hopefully you don't, and that's the goal. I know you're not. I'm not saying you did.
That's why we have all the educational content we do online.
It's all on the website. It's very comprehensive. You guys will not get a better overview of these tools.
And the QR code. I think it's up there.
I'll say this. In terms of order flow, especially, like there's people out there that can do what I do. I think there's not very many. There's maybe a handful. But I'll say on order flow, and I've been in this space a long time. I've been doing order flow since 2020. And that is something that Max has done very well. I don't know that there's too many people out there that can break down a trade in an order flow sense and just trade off of that as well as Max does. And he puts all that effort into the content. And so when it comes to order flow, if you guys can get into that and start wrapping your brain around it, read the books, take the notes, spend the time, because it does take time. Max will tell you it fucked his trading up for like 3 months when he started learning it. It's very, very helpful. It's very good. But I would put him up there like into the top of the space in terms of order flow, because I saw someone say something, and I'm not going to throw any shade or name any names, but someone held a live stream and they were like, no one told you not to buy this 21. Where's the Bitcoin chart? right here. They were saying nobody out there in the space was telling you guys that this wasn't going to hold us support if we revisited it. And if you guys recall, we had a public live stream days before that saying that we don't expect a swing fill of this low that we had front ran. We'd front run it right here. We said if we come down here, there's really nothing there for a swing failure. You don't have what you need in the order flow. So if we revisit those lows, the likelihood of it being a good swing fail is going to be pretty low. And that's exactly what happened. And we dumped down to these other targets down in this region. And it's one of those things where when I see stuff like that, and you know what they told their group? They said, I had a feeling. Well, we've got a guy who didn't just tell you had a feeling. He told you exactly why it wouldn't happen. You know, that's the thing. So make sure you guys are taking advantage of that, because this is very rare educational content that we're even giving out for free. Because I'll say it once and I'll say it again, you know, it's hard to navigate this market, including for myself. It's not easy to be patient and wait for these targets to be hit to take profits at like 26K when you've been holding along for 3 months, you know, and it may go past that point. And you have to be okay with that. So I'll say it once and I've said it again. I can tell you guys where price is likely to head over time. I can tell you almost when it gets there a lot of times, but people will still, you know, get lost in too many other people's opinions and not follow their own plan and execute. And so, you know, I saw a lot of people saying on Twitter yesterday, we talked about the idea that this could happen, you know, and blah, blah, blah. But like, let's see where their position is at. Like, did they take advantage of it? Were they able to execute? And if they weren't, then it doesn't matter. They're not teaching you anything of value. If that's the case, if you're not able to take the information they gave you and execute with it, then you have a gap somewhere. And that could be just in trading execution. And that's not something that's fixed overnight with one video or anything, but it is something that you have to practice over and over again, you know, figure out where my risk is at, my stop loss. That's how you make consistent gains, is, you know, hedging that, you know, in terms of like managing risk. It's tough. So, you know, that's all I'll say about that. But yeah, I haven't got much else. You know, Matic, if it gets through 129, you could see a decent push. I'd probably close out of the rest of that short for me. Yeah, no, I appreciate that, DCF. In terms of the Fibonacci time, the way I teach it, just so you know, is not in that Carolyn Borden's book. They're literally methods that I created. It's not something you're going to find in another group. So when I give a Fibonacci time, it's all based on session data. It's not based on typical highs and lows that you find in a market where, like, some people, I heard somebody say that you have to know Elliott Wave to use it. I've said that before, and that's not true at all. You can use it that way. However, we do have tools that we can start to work up, you know, time and price objectives. So, you know, just keep that in mind. There are lots of different ways to trade this market. There's not always a one way that's best. It's just the way that works best for me, and it works in my system, because the way I like to teach stuff like that is it complements the other tools we're already using. And it makes sense. You know, once you have that system down, you're like, okay, everything's on a time basis. And if I'm going to, you know, pull, you know, sign lines for volatility, it's going to be done in the same fashion that we're using all these other tools. So it becomes kind of easy to start to wrap your mind around once you do that, because it is really a system, you know. But Fibonacci retracements aren't stupid by any means, DCF. It's just, you know, they are really useful. So I spotted the 32K lows, believe it or not, from our dump off of the 69K. When I joined CVO's group in December, I gave a target of 32K using Fibonacci expansions and other Fibonacci ratios. The problem is once you get there, you can't just blindly buy it. You know, you use those fibs to find your target. And then once you've got the target, you use what you just talked about, order flow and CVD analysis, to say, okay, is this a good time to be buying? Is it not a good time to be buying? You know, that's what's going to get you there.
Fib retracements are like a staple point of my whole analysis.
Completely. Yeah, they just give you the inflection point, and then it's up to you to pull the trigger. But to get that trigger, you have to have something like order flow. There's guys out there that use things like Market Cipher. I'm not a Market Cipher guy. You know, it's one of those things where, is it a bad tool? You know, it's probably got some use case, but I just don't. It's not how I trade. I did hear someone yesterday on Debate Crypto say that it was the best money flow indicator. I was like, that is not true. Like, there's actual order flow to watch what's going on buyers and sellers wise. I would hardly say that you could chalk that up to a super waves indicator, basically. But, you know, again, there's guys out there that have whole strategies based on that work for them. And if that works for them, then by all means, like, make money. Like, if you're making money in this market, go for it.
I strongly disagree with your last statement there, DCF. And also, I imagine a market cipher, if used with some order flow, it'd probably be pretty good, to be fair. I'd imagine.
I think he's referring to market cipher doesn't work as great on day trades, is what he's saying, not Fibonacci retracements or order flow. But yeah, no, fibs are great, man. Those are like a staple in what we do. You see us pull them all the time. We're obviously gold pocket hose for sure. Like that's where we spend most of our time looking for stuff like that. But this week I'm hoping to get out a harmonics video, and then I do want to redo our Fibonacci section, maybe break it up, because right now the video is literally, how to pull retracements, what they are. Like 50% is Dow's theory. It's technically not a Fibonacci number. The 382, 618 inverse. And then I have expansions, negatives, and trend-based Fibonacci all in the same video. And I'm like, fuck, that's a lot of information, I think, for a new trader. Oh, yeah, you're at work. Oh, man, that's cool, though. Yeah, but there's no shame in people that use that indicator. I mean, it's a good indicator, obviously. Hundreds and hundreds of people, thousands, I think, probably use it. Just like thousands of people use order flow, so it's, again, it's a give and take. It's whatever works for you and what makes sense to you. Because at the end of the day, you have to be confident when you're taking the trade. So just remember that, like, your confidence in that trade is going to also really affect the emotions that you're going to go through in terms of, being comfortable letting your stop loss get hit, knowing where you're wrong, or just letting the trade play out. A lot of people like to tinker with their trades once they're entered. So if they tinker with them too much, you can find yourself doing a little too much and not actually learning anything, because then you can't quantify that data. Only thing you can quantify is that you've meddled too much with what you're doing. So targets on this video, man, we've already hit them. We're going for 46 minutes here. So exciting day. This was not expected going into the weekend. I was not expecting us to go from 19.5 all the way up to 26.5 essentially, and over the course of like 3 days. But very interesting. We will talk a little bit about, I guess, like what's going on. You got Silvergate Bank, second largest bank failure, which the government's going to back the deposits on 1-to-1, which is interesting. CPI came in well underneath projected, which was good. That's a very good thing to see. You want to see CPI coming down. So the next question will be is, do they pause rate hikes? Are they worried about the banks? Is there a trickle down effect here that, maybe we see a bigger slide later? And that's always, something that we can say, oh, it could happen. And I've always said, if it does, it's going to happen the second half of 2023. And we're still in the first quarter of 2023. So, we've got time, but, inflation coming down is not surprising that it's starting to finally show, because those 75 basis point hikes that we went through, which were really high, they still take time to take effect in like 6 months. And we're just now seeing that. So if inflation is going to come down, we'll start seeing it, and go from there. But the idea of the banking thing is a big deal, because if the banks start failing, then you have housing problems, things like that, and that leads into the economy generally. So, yeah, I mean, I don't really necessarily know that it's too much. I know Congress had an emergency meeting last night, and they talked about it over the weekend. Or not last night, over the weekend. They had an emergency meeting on Sunday, and all members of Congress were on it. It was a Zoom call, and they had talked about how they're, establishing it's not a fund. It's something that banks are paying into, so it's not coming out of taxpayer money, so that if these banks do fail, that they've got funds there. Kind of like an insurance fund. I don't know if you guys are familiar with how insurance works on property side of things. Like if all insurance companies pay into like a fund that goes through the state, and if an insurance company goes belly up, which can happen, in terms of like disasters, there's funds there that are available to disperse. I think that's what they're trying to do with the banks. So we'll see, what happens if a bank run does occur beyond this. I don't necessarily know that it will. The only thing that was disappointing is, they paid out bonuses to the people in the company, stuff like that. That type of thing you're going to see in the news. And it's definitely an emotional trigger for sure. And it is for me too, because you guys know how much I don't like banks and stuff like that. It's just not for me. But yeah, we'll see. I mean, I start to lean towards maybe they throw a pause in there. We were thinking maybe they go 50 basis points because the CPI was coming in so hot. Maybe they throw a pause, and maybe they just do a 25, which was kind of to be the expected, was 25. And, then we saw some bad data and we thought maybe 50. But I think it's going to be 25 or pause, and I think that's bullish for markets. So we'll see what comes of this. Maybe we get this greater rally over the next quarter into like that May, June timeframe before, kind of like last year. You know, if you guys recall, the timeline on this was last year, and we actually had time for that as well. For anyone that is in the group, you guys know we were looking for really specific targets, you know, but like when you look at the dump here, it started coming in June. Where's our May dump? Right here. And I'll show you how you could have found that. So again, this comes down to Fibonacci time and how you use it, and a little bit of harmonics, you know, so we're stealing some stuff from people here, but you had the infamous butterfly, right? So this was your finishing move at 69K that was called out by Erska in the group. And then we're just looking to measure when this move's going to happen. Right. And now we come out to the 1-to-1. There's your dump at 25K. It gets even better. We can take this now. We can project both for time and price like we're doing now with Fibonacci time. And we can throw a channel on it or a really nice fork, which is essentially just a channel. And there's your 1-to-1 right here, guys. This is it. So we were looking for these lows at like 25. I want to say I gave 25 like 1 something. I want to say it's 25 120 something for the low. It came down to 25 2, but to the day almost, months in advance, 1-to-1 in time into your EQ. And you can see this has been absolutely gold in terms of the trend, because this is our high time frame trend really. And you can see that you're now trying to break out of said trend. See, so we're breaking out. So this is why when I say, even from like, this is now confirming things that we were just talking about, right? We want to hold 24/7, right? Well, what happens if we start breaking back down below like monthly open, which is what we just said is that key level? You're back inside this trend, and this all looks like a failed break of the trend that you established all the way back in 2021. And off you go. And look at that, the 2 spot's good. Where's the 3 at? In May. So sell in May, walk away, right? So we're still looking up potentially, and you're breaking out of this trend, which you haven't been out of in a year and a half. You know, that's a little different style of analysis, but you know, you can do analysis a lot of different ways. It just depends on what works for you and what doesn't. But yeah, that's how I'd be looking at that. So I still don't know how to say your name. You are correct. Erska. I think that's as close as I'm going to get. She's Slovenian, so she's going to have to cut me a break. Max does. He knows that us Americans, like in our English, is not very good. But yeah, that's the nugget for you guys that aren't in the group. If you're curious about, you know, how you could be watching the trend using some of the tools that we talk about and teach. Pitchforks is something, again, there's people out there that do pitchforks their own way. I actually have my own methods of doing them in specific ways that I like to do them. So yeah, I don't claim to invent things, but those are things that I have. I doubt there's anyone else out there in the space that does that outside of myself that didn't learn it from me. So, you know, I'd be very surprised, but nonetheless, I've got nothing left to say. You guys have the levels. You're either looking for that gold pocket Max had shown us, right? From the high to low, which I think we did probably come up to, or got close to at least. Looking for something like, oh man, look at that, front run by a little bit. Looking for the move down. Where's the VWAP at? All the way down at 25.2, which is where, guys? Where's that box we just talked about? Let's go back to this guy. Turn on the VWAP. Where's the box that we said needs to be held as support? So if we see the VWAP, it's coming in very nicely at what? The prior range high at 25,351 and the prior range low. If we were to scan to the left, if we can go that far on the 1 hour anyway. We have to go real far. All the way over here, right? So if you see the VWAP, I would expect some kind of a reaction out of this zone. If you don't get a reaction, well, you're going to make that $24,700, $500 trip to Pound Town and probably down to the monthly open after that. So I would be careful and cautious on that one. Otherwise, I don't have much else to say. Otherwise, we'll just be chatting shit. And I know you guys enjoy that. Max certainly does. He's over there playing with his glasses and his hair. So I'm going to go ahead and sign off. I'll be in the group. I'll be around today. I got no kids. So I actually have a day where I'm not like hustling and bustling with the children all day. So it'd be nice to relax a little bit. I wish Bitcoin would give me that chance, but you know what? The market doesn't really care what you're doing. So again, if you guys enjoyed the stream, do us a favor, hit the like. If you're watching it back, leave a comment down below. Even if it's get wrecked, you guys suck. This would be such a dirty bull trap if everything nukes back down. we'll show it. Yeah, no, it really would be. So that's why I say you got to be cautious here. When we say reaction, so let's say you come down to that VWAP and you have those two levels of confluence. I would expect there to be a reaction there, meaning that I would expect to get a bounce. Now, if that bounce fails, is one thing. And it doesn't have to give me a reaction there, but if I'm looking for areas for the next, long reaction, even if it's just a day trade, like on an intraday, like let's say that I'm only interested in trading this, and this is the New York session candle right here. So we'll go to the 5-minute. Where'd the New York session open up at? Where's 7 o'clock? Boom, right? Say we come down to the New York session value area low. We got the VWAP here. You've got these two levels of confluence. I'm looking to take this long back to the point of control if I'm trading this as a range. And if I'm trading it from a average standpoint, I've got my session VWAP as well. So it would be like something like this. And what you want to see when you come into a region like this, and Max will tell you, is you want to see either shorts being trapped. It's his favorite thing to do is trap traders, right? You find people that are shorting into this level, expecting lower prices to break back into the range. Or you just want to see that maybe open interest is declining on the move. And it's really just people getting out of positions. And then you want to see new positions opening and forcing price up. And that actually is a really big bounce. Holy shit. Back to the point of control. That's like 3%. That would be quite the day trade. So, I'd be cautious here if this fails because, you run the risk of filling in some of these inefficiencies below you. Especially Max was talking about a single print. I need to pull that up, make sure that your single print runs down to 24,992. So that puts you back into this weekly swing fail area. So that's the caution of it, right? There's the cautionary tale that if you reach this area of the chart, you will be in that single print because it starts at 25.6, which is basically below the New York session VWAP. Yeah, I mean, you would be expecting to come back down. So if one took the short here from the value area high in the front run of that gold pocket of the New York session, because that's all this is just a range. If it breaks down here, take profit one is obviously going to be the single print high or the VWAP. Then the next one is the daily VWAP and the value area low. And then you're looking to close out that single print at 24,992 or try to hold the 24.7. But if you're in no position, you're dead set in the middle of the range. You're not at resistance. You're not at support. There's really no trade to be had right here. It's a matter of patience. Either I'm going to get a short from up here if the order flow indicates to take one, or I'm going to get a long from down in these regions if the order flow said so. If the order flow doesn't give me either of the trades, then I'm probably just going to be a bystander today on the day trading side of things. And that's okay too, because we didn't lose any money doing that, right? The market will be here tomorrow to try to find another trade. So that's all I'll say is exercise a little bit of self-control if you guys can. I hope that helps Pinchy, if I'm saying that correctly. And thank you guys for saying. So DCF, we actually have a policy and a thing that we're going to say. So this is the last thing I'll address before we go. We really don't want to be known for gatekeeping. A lot of the communities out there are known for, oh, these guys are gatekeeping information. Got to join my premium Discord to get this information. We do think that our content, our educational content that's available on our website is top notch. And we think it'll give you the jumpstart that you need to learn this stuff quicker. However, if you come to these live streams and you ask us a question, I will never answer that question of you're just going to have to join to find out. So many people do that. And it's very frustrating because giving you some free information on YouTube is not going to turn you into a profitable day trader. It's going to be your own efforts for one, consistency and hard work, regardless of if you have a program or if you're coming into live streams every day like this. So us coming up here and doing TA like this in the fashion that we do, it doesn't hurt us at all. We're only trying to get you guys interested in tools that we know work. And if you guys want to come over and take advantage of our educational content that we've put hours and hours into, I mean, like I would say close to 100 hours of our time goes into making this stuff as far as a whole. Now, obviously there's not 100 hours of educational content on there, but we are working on expanding it a little bit and taking some of the lessons and cutting them up into shorter bites so that you guys can digest them in increments rather than, watching an hour-long video. But it is a lot of time and effort at that point. And so that's kind of, the whole thing. If you guys want that, go for it. If you don't, you're more than welcome here or in our public Discord side to ask questions or, post charts or just come in there and bullshit. We have, I think, the memes section, the pets section, MMA and sports section. We have free sections in there for you to interact with everyone, from members to general public. So we want it to be a community where people can come in and like joke around and be happy, but also talk about some serious technical levels if they want to. You know, it looks like Max has either something to say or he's typing something. I can't tell. I think he just leaned into his camera. That's all. Oh, he says, all we ask is a like and a sub. Yeah, we do appreciate that. A like and a sub goes a long way. Share it with your friends, right? So we're kind of on the candid side of things as well. We're a little on the blunt side of things. So sometimes the language gets a little colorful. You know, we do joke about some things, but it's all in good fun, guys. So I'm going to go ahead and end the stream. If there are questions that we missed, you know what to do. If you put a comment on the video with the question, we will answer it tomorrow morning when we go live, or you can join the Discord, ask us in the general public chat. Or in the members chat if you're already in there, and we'll see you there. All right, everybody, cheers and have a great day.